Welcome back, traders, to Creative Vest Stocks. Today, I'm going to be talking about Tesla, ticker symbol TSLA. In my last video on Tesla, we discussed the stock split and what it might mean for the stock. I also did a technical analysis on the stock to show you where you might sell to lock in gains should the stock react negatively to the stock split. Today, I want to be updating you on the stock's progress. I'll give you a brief overview of the stock's fundamentals, and then we'll go through some technicals to show you where you might still be able to get in on the stock if you missed the last couple of runs it's had. As mentioned in the last video, shorts are bite-sized videos packed with all the essential information that you need prior to placing a trade. If you like what you hear so far, be sure to subscribe, smash the like button, and ring the bell so you can get alerts to my videos every week. I first started investing in Tesla back in December of 2019 when it was trading at just $67 per share. Now, I didn't catch the whole run, but I got most of it, and I also managed to sidestep most of the corrections in the stock. I just took a position in the stock, and my hope is with this video that I can help my fellow traders get a slice of the pie. At Creative Vest Stocks, we use the NEST acronym, N-E-S-T, to evaluate stocks if they are a buy or not. If you'd like to see how I use this process for AMD, then stop the video now and check out the link above. I think it's evident that Tesla meets the N in our NEST acronym for something new, a new product, a new innovation, or new management.
Now let's check out the fundamentals, the E and the S in our NEST acronym, earnings and sales. The first thing that I want to draw your attention to are the earnings. Notice how the stock has reported earnings increases quarter over quarter over the last 3 quarters, accelerating from 10% to 140% and then 300% in the latest quarter reported. And that's what's been the catalyst for growth. I also want to point out that the stock is outperforming 99% of the entire market. The next thing that I want to point out to you is the up-down volume ratio. An up-down volume ratio of 1.7 signifies that there's more buying than there is selling, so there's more up movement than down movement. And the very last thing that I want to point out to you about Tesla are the earnings expectations for this year and next. The earnings expectations this year are 990%. It's that way because that's the highest it'll go on this report software. So the expectation is that whenever it reports earnings in 9 days, that it's going to be a good one. In 2021, it expects to increase earnings by 69%. Another big increase year over year. And while the sales have dwindled in the last few quarters, the expectation moving forward is that these numbers are going to improve. Before we move on to the technical setup, let's talk a little bit about sales expectations. This is going to be very important, especially with the earnings report coming up here in about 9 days. According to Barron's, Tesla is expected to grow 40% year over year for the next few years. If that's the case, then the expectation is that sales are going to continue to grow quarter over quarter. So we should see a nice sales increase this next quarter. However, it's a bit of a double-edged sword. Because if the expectations are really high and the company disappoints, that could have a negative impact on the stock. Just make sure that you're protecting yourself by having a nice profit cushion going into earnings. I recommend at least 10%. We need to move to a daily chart to see where there might be an opportunity to get in the stock technically. The T in our NEST acronym stands for technical setup, and what we're looking for is a breakout from a base pattern. Now, this pattern that the stock is producing right now is what some might call a bull pennant, or a pennant pattern, or a flag pattern. Well, it doesn't really matter. What matters is where is the support and the resistance. There seems to be some resistance here at $440 per share. And you could start buying it right there. There's also some resistance right around $460 a share. You could also enter a position there. The final area where you could enter a position, which may be a little bit more risky, is right here at $502 a share at all-time highs. I do want to make the point that you do want to define where you're going to buy the stock and where you're going to sell it. How much risk are you willing to take on the stock? If you're down 7 to 8% on the stock, I recommend that you sell it. Also keep in mind that the company reports earnings in just 9 days. So if you enter the stock, I recommend that you have at least a 10% profit cushion if you're going to hold into earnings.
If you're already in Tesla stock, or if you'd like to be in Tesla stock, then do me a favor and in the comments below write yes. Now that we've identified one stock that you could get into, would you like access to more? Then go to my website linked down below and check out my services for one-on-one coaching and our private Twitter feed where you can get access to live alerts on when to buy and sell stocks. Also, if you like what you see here and you really just want to support the channel, then please check out my Patreon page. When you pledge just $10, you get access to my personal portfolio, trade plan, trade alerts, buy and sell logs, and my personal metrics updated weekly. Check it out and see how I turned $100,000 into $300,000 this year alone. If you enjoyed this video, then be sure to subscribe, smash the like button, and ring the bell so you can get alerts to my videos every week. Thanks so much for watching.